What's up, bros? Kano here, Bulls on Wall Street. Let's get an update to the 2024 yen carry trade crash and go over what's happening and what the game plan is. Guys, one thing to just be mindful of is that what we are witnessing is basically a deleveraging situation that's happening, a staggering a liquidation and deleveraging that's happening in the financial markets due to what now is known that everybody's talking about is the yen carry trade, which is all happened numerous times in the past too, in which the reasoning is people are borrowing yen at negative percent interest rates or 0% interest rates, and using that essentially as margin to buy tech stocks. And when the Bank of Japan has raised their rates, it caught everybody for a loop because Japan has been at the same interest rates forever, right? Because they've been in deflation since like 1989 or whatever it might be. And so they've always kept a very, very loose monetary policy. And so that surprise threw everybody up. What happens, guys, and this is something to just be mindful of in all situations, in the stock market or anything. When you get crowded trades, like these kind of like epic crowded trades, right? Where like everybody's levered into a trade. It doesn't really matter what it is, the yen and Nvidia, whatever it might be, right? When you get a crowded trade, the delevering of that trade, the unwinding of the trade becomes very intense. And so that's what we're witnessing right now. And I think, we probably had a little bit of a blow off. Now, does that mean, today was the bottom? That I do not know. But what we do know is that this is mainly a deleveraging situation. And we've seen this numerous times in the past, whether it's, your long-term capital management or, your housing and, things of that nature. So we did see kind of that blow off today with the 5% gap down in the QQQs. Guys, that's some, kind of COVID era type of stuff. We've seen that in COVID. We saw that in 2008. And so it is a rare occurrence. You don't see 5% gap downs in the market very often. We were in the Bulls on Wall Street chat room. I mean, we were longing from literally the opening tick on Soxel, Nvidia, ARM. I mean, we were in knee deep opening tip, and then by 8:35 I was already fucking selling out. Half, quarter. Like it was like 9:47, 8:47. I was loading out of so much stuff, and then kind of rebooting back into these. You got to, when you see a 5% gap down, and it's on the tail end of numerous other gap downs, you've got to essentially come into this. So we had a little bit of a blow off. If you look too, and this is how you kind of know it's a deleveraging situation, right? Look at the VIX in the morning. And then also if you're really kind of looking at, everything in the pre-market, things were just crazy. And, right off the bat, right, this thing kind of blew and collapsed on it. So that kind of pushed the market back up too. And so we got a great bounce in the markets coming, right off at the open. And then, we kind of farted around the rest of the day, which is to be, to be expected. We closed over the 200-day moving average. We have room still to the 9 EMA. We have multiple unfilled gaps. And so I think this is something we can still play to the upside. The big question just becomes tomorrow. If we gap up, then what, right? Because, we start running into some levels of supply here. And so ideally a flat open or even a weak open would help, as stocks are still very oversold. And so I want to keep the game plan very simple. Things to remember: number one, we're in a deleveraging situation, right? The unwind can take a little bit more time than you think sometimes, but to usually start it the other way, you need that massive blowout, that massive capitulation, which we got in the morning, basically the opening tick. Now it's okay. Today's trade was the layup, the fat pitch, and it was a fucking fat pitch, right? I mean, it did. I mean, this thing opens up at $23, it hits 30, like that is the fat pitch, right? So Now what? The easy play is over. All right. The gimme play, the close your eyes and buy play is over. So what happens next, right? That's the big hairy Indian butt now, is what happens next. So a couple things to remember is that we have room. So I think there's two things that are important. Number one is we closed over the 200-day moving average and we got these two gaps on the QQQs. The SMH closed over its 200-day moving average. We got a big gap here too. And so we have the key spots, they held, all right? So that's a buenos, and I think that's something that leads me to think we have some more upside to it. Some geopolitical things to be mindful of. You know, there was some PRs on the wire about Iran attacking Israel. I don't know if that's really anything. If you guys remember, these guys were sending all their huts and TPs and sandbags at Israel like just a few months ago, right? And there was like 7,000 drones and they all got fucking shot down, right? So I don't know if it's a huge thing, but you know, hey, things are things, right? Things that we don't know are things become things, and then we're thinking that was the thing when we didn't know it was a thing, and before you know it, we're just like all over the place, right? But these are the two things that I think are important. We held on the SMH, we held on the QQQs, and you know the VIX came down a little bit too. We didn't see much, pullback on UVXY or some of the VIX ETFs. But I believe if probably we run tomorrow, these are going to be in collapse. So these are the two at the top of my list to take down. Probably I'll use VXX as the proxy if we get a run in the market. And usually what I do on these is, it's late in the day. If you get a real powerful run, where you pop up in the morning, consolidate, you run late in the day in the QQQs, then you'll see the collapse on this one. That could be just epic. You could get, if you time this right, 30, 40 points even intraday. I mean, the range will be just incredible. And you could use UVXY too. I believe the IV will probably be a little bit too expensive to do puts unless you go far out and it just blows out or something along that end. So my game plan for tomorrow, I want to long this Soxel again on weakness off the SMH, holding at the 200-day moving average. I keep that simple. I think MU close right near the red to green spots. I think this has got room right to the 200-day moving average and the 90 MA. AMD had relative strength today, is actually a decent amount. And you got an bullish engulfing candle. Maybe this is the bottom on this bad boy. We'll keep this going. Dude, TSM. Dude, I had so many heaters just right off the open. Close your eyes and buy type of open. Ran right into the red to green spot and rolled over. But I think this has probably got a little bit of room. If we can, if we can get a little bit of a weak open or flat open. AVGO held its 200-day moving average, right? And so we've got a handful of these. I think this one's got a little bit less room and is a tougher to trade. So I'd rather go, MU or Soxel. You can just trade NVIDIA. And the other one, I think they'll have the best range out of the group is the ARM Nation, because it essentially got cut in half, right? And when you're in a bull market in semiconductors, AI stocks, whatever it might be, however long it lasts, you're going to have these big pullbacks. But, you drop 50% on something and you're a believer in the trend on something, that's something to be mindful of. I think this is closed right over the 200-day moving average too. And then, guys, couple things to just be mindful of if you're looking at daily charts. Always take a look at the weeklies on these bad boys, right? The QQQs close over the 50-day moving average on the weekly. The SMH closed right at the 50-day moving average on the weekly too. We got multiple down weeks triggering oversold. So you've got some clean spots here that I think could be in play. Palantir also reported earnings today, and you got a nice pop on this one too, so maybe this will be in play. I probably won't play this one because this is not the earnings. This is not the season to do gap up plays on earnings. We haven't seen very many good ones at all that have held. Even Apple rolled over end of day on Friday. I mean, they all did, right? Anyone that showed some level of green. Meta hit 520 on its earnings day and rolled right over. Dude, I so much short of this thing with the puts, and I mean, just rolled right over. So Palantir, maybe it holds, maybe it doesn't, but I don't think that's the play. I want you guys to focus in on the liquid names, the indexes, big caps, right? And semiconductors, and that's it. Right now you're gonna have enough liquidity, you're gonna have enough right range in ATRs. I mean, if you look at something like ARM, it's got a $15 ATR, 13%. 13% ATR for $100 billion company is just incredible, right? So you don't really need to trade like other stuff at the moment. Once the market unstucks, unfucks, whatever you want to call it, then we can come in and we can roll in with all the other stuff. So game plan, let me just repeat. We've got ARM, we've got MU, right? You can even take maybe a little Qualcomm at a nice day on this one too, right? Take a very narrow view. You could use Soxel. I want AMD, right? So we want to just be in a handful of these semiconductors. We want to play the QQQs as long as it's holding over the 200-day moving average. This is the one that's had the most damage done. Don't be worrying about the SPY. I think you can roll with the QQQs. The leverage ETF for QQQ is the TQQ. It's got good volume, 146 million shares, right? And then I want to bleed off one of these VIX instruments. Now look, I'm playing for the bounce because we're still oversold. Tomorrow, if things change on the dot, if it looks like, oh, shoot, right? Then we reverse things around and, we go short city. But I do not like to short stocks in the hole, right? Like, if you're coming in trying to short this thing after it's been down 20 days in a row, right, you're asking for trouble. So oftentimes, oftentimes you may get some weakness down in the morning and it looks like everything's a short and they just double bottom and then they rip back. It's just a trap, all right? You'll oftentimes, after these kind of big down days and then a reversal, maybe not retest, but make a higher low, something along that end. Guys, don't be heroes. You can trade small right now and let the range play itself out and you're going to be just fine, right? Or you can just sit out. I'm not a big believer in sitting out. Even if you're new, I would try to get the screen time, learn something, and just trade smaller, right? Don't take days off, trade smaller. Never take days off. Trade smaller, trade less, right? Lower the risk profile, but get that screen time because you need to be on the turret during these times to learn how this all moves. I've seen this specific move. Everybody in the chat room is asking me like, dude, why'd you buy like literally the first 2 seconds the market opens? It's like, because I've seen this exact scenario so many times, right? Dozens on dozens and dozens of times, right? And so we know what to do. But for the rest of you guys, right, you need to be in the turrets and you need to be jamming those buttons, even if you're just trading 2 shares at a time, and just get used to it, right? Right? Build up that cock stamina a little bit and get things going. I love you guys. Be safe, trade fast, and you know what we got to do tomorrow, which is the do. Love you guys. Peace.